Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today I think we could take a look at the Canadian dollar, because now a major currencies that we're usually watching for is the Euro currency and Great British Pound. There are mostly no action stands. As we have discussed, yes, the market has reached the important support area, but no other action has happened yet. So on Euro currency, as you can see, market stands at our XOP target, as we have discussed recently, but no progress here still stands. On the Great British Pound, guys, it's also market has reached our confidence support right here, but it's also unclear what will happen here. It's for a choppy action on the daily chart. We're still waiting for a possible double repo, bread and butter trade. On the intraday charts of the Great British Pound, as you can see, it's a kind of rounding bottom is forming, but it's still unclear what result we could get, because today, as you know, a Bank of England meeting, and it will be probably significant volatility. So in results of the Bank of England, although we're forecasting that no rate change will be, but also it's interesting what they will say about the overall situation in the economy of the United Kingdom, and their forecast on the perspectives also could make sense. So currently, guys, on the Great British Pound, it's also not much really interesting, because taking short position right at the confidence resistance, confidence support, it's a bit not very good, and it's better to wait for some pullback, while taking the long position here would not have clear pattern. Only that you could get probably it's maybe minor patterns, such kind of the maybe guard is triple to buy here could be formed, and you could try and take the position on some retracement. But personally, I really not very fascinating with the taking a long position on Great British Pound right now. That's why I'm just taking around and think that we could update our view on the Canadian dollar, because Canadian dollar right now stands in the center of the events, because it has relation to the crude oil, and you know that the United States canceled the Iran nuclear deal, and that has made an impact on the crude oil prices, because if you remember our long-term forecast on the crude oil, we have expected, since this action has started approximately even in the last year, its year has passed since our discussion of this situation, and we said market should complete this ABCD retracement and close the here was the gap also previously. So anyway, and crude oil should reach this, maybe on the monthly chart it will be better. So should complete this ABCD and close this gap, this upward action. So that has happened. It's also some kind of resistance, but result of the nuclear deal, as you can see, the pushing prices of the crude oil higher, and that makes an impact on the Canadian dollar. As a result, Canadian dollar has shown the failed breakout of this resistance area and this consolidation on the daily chart, and that makes us to return back to discussion of our long-term forecast. If you remember, in the Canadian dollar we said that probably it should be kind of the AB equals CD downward action, but we do not know yet what the factors could put Canadian dollar lower, because make it stronger, because on the first glance on the economical factors, Canadian dollar should continue rising, the chart, because we see the strength in the United States dollar, we see the rising yields in the United States, so that's of course should put the pressure on the Canadian dollar, and definitely should continue to move higher. But that new event that has made an impact on the crude oil price, maybe this will be the major driving factor. And how the situation will be resolved, so also it's a really big question what the consequences will be of this event, because this is a very serious moment. So that's why in the short-term perspective, we currently will not talk about some far-going forecasts, but in the short-term perspective, guys, in fact, what we have here was some consolidation was forming. This was our former neckline, as you can see, of the hand shoulders that we have traded. So market has taken the consolidation, has shown the breakout up, but the next session has failed and returned right back down. This is very bearish, guys, and this also is happening around the major 618 resistance. Now market is forming downward action. Yes, here is the hint on the possible bullish grabber, but in the current circumstances, it's a very big chance that grabber could fail, or even will not be formed, as market will just continue move lower here and close below the MACD today. As a result, on the 4-hour time frame chart, usually when market shows the failure breakout on the consolidation, it leads to the real breakout in opposite direction right here. And here mostly the question how this will happen. Either market will just break it down, will continue to move down and collapse directly without any retracement, or it will show some minor bounce here first and then continue to move down. So a second scenario, it seems more probable. Why? Because we have the bearish engulfing, guys, on the daily chart. And usually when market forms bearish engulfing, it's most common issue. It's the rule this happens. Market shows minor pullback inside of the body of the engulfing pattern. That's the first moment. Second moment, take a look that the upward target of this breakout stands at the 1618 extension of this largest swing inside of this consolidation. And this is very typical for the hand shoulders, guys. That's why I'm not excluding the chance that here will be kind of the pullback here. And that will be the opportunity to think about taking the short position. Because as a result, we could get, you probably already see it could become the hand shoulders pattern. Approximately, the target will be of this downward action. This would suggest the classical target of the hand shoulders. This will be approximately 2720 area. So something support probably of this upward action as well. That is our short-term view on the Canadian dollar. Because usually when the market shows strong collapse, strong failure of some breakout, it usually leads to the significant consequence and downward continuation here. It seems very probable. So let's see how the situation will turn.